I'm Temia Brinson from Mindset for Success. And tonight we have a very informative show for you. We have our special guest, John Burnett. He is the founder and managing director at One Empire Group. He's also an author and business commentator with appearances on CNN, Bloomberg, and Fox Business. Now, what do you say now if you, because sometimes I don't always go with the leading company in that particular industry. So what if you find a good company that's doing a little less performance than the leader of that industry, but if you look at their outlook, you see that they're going to do well, or you think that they're going to do well. So
Sometimes in situations like that, you know what? Wow, these are pretty good horses. One is a little bigger than the other, but the other one, the smaller one, potentially has a higher growth return in the future.
yeah,
Sometimes, to be honest with you, I like to spread a little money on both.
oh yeah,
You know, because sometimes it's hard to pick just that one horse, so to speak.
right,
So you might put a little bit in both camps,
right,
especially if the
okay,
overall market and outlook looks pretty good for that industry. For an example, if you invested into Target and Walmart, you did pretty well.
yeah,
If you over the last year, if you're trying to figure out, wow, let's just say back it up. Let's just back it up. Rewind the tape. Just before COVID, right? And then we moved into the COVID space. Everyone's forced to stay home. It's another part of research. Look and analyze information, just regular news stories, and translate that information into investments.
right.
Information is key, right? When there's that discernment that I'm talking about, right?
Yeah.
So when people hear trends like, wow, shutdowns could last for months, could last for 6 months, right? People are home. What do people do when they have
They
nothing
get
else to
on
do?
Zoom, WebEx, Skype.
No. They get on the net,
Yeah.
Amazon, Target.
Come
They
on.
shop, right?
Yes.
Just like regular times, people just go to the mall. And when chances are, when you go to the mall, you're going to buy something.
Right.
If you're in the house for extended periods of time, right? I've heard stories of spouses hiding packages from other spouses, right? Leaving messages with the delivery people because they don't want their spouse or significant other to know how much they're spending.
Buying. Yeah.
Right. So understanding those trends, of course, you can actually buy the retailer, but somebody's delivering those packages, right? So another good opportunity, just hearing the news. FedEx, UPS.
Oh, yes.
Their stocks exploded.
Did. Okay. Yes.
Right? Guess what else did pretty well? Visa and MasterCard. Because whether you're spending through credit or debit, guess what? Transactions, the volume, right? So it's understanding, taking the news, and many times the news will give you leads of where you should do your research,
right,
and what information you should pull up.
Yeah.
Right? To see, okay, I got retailers, I got distribution, right? And I have transactions. That alone, if you just would have done that simple analysis and then look up, how well retailers are doing, let's say Walmart, Amazon, Target, and so forth. You look at how much money you have and you figure out, all right, I want to do Walmart. Oh, you know what? I don't know if Walmart or Target, I'll put a little money into both. Then you might say, well, wait a second. If sales go up, somebody's got to deliver those packages.
Yes.
Maybe so it's understanding and doing that type of analysis at the company level, then look at the entire industry, then look at complementary services like in this case, distribution, FedEx and UPS, as well as facilitating the transactions, MasterCard and Visa. So it's understanding, looking at those things and figuring out where to invest and how to invest.
Okay. Wonderful. Yeah, I did a comparison analysis, and then, but both were doing good, Moderna and Pfizer. So I did that too. I spread my wealth around. So, but you can see which one is outperforming the other when you do that, as far as, where to put your money.
Well, here's the thing, right? Is knowing who you are. Now, I like Pfizer because of the dividend. Now, it didn't move up a lot in terms of the stock price, right?
No, it did not.
But guess what? Temia, I did both.
I did too.
Put money in Pfizer for the dividend and the potential for spike, but I also put money in Moderna. That wasn't paying the dividend, but it had huge capital appreciation value, right? So again, you might want to hedge the bet, right? But with the dividend yield in Pfizer, you still did pretty well, right? In terms of that baseline. But so think of Pfizer giving you a baseline floor, but then Moderna actually increased your portfolio returns because of the capital appreciation. Right. So sometimes you could do a little bit of both when it comes to investing, and you don't have to be one trick pony or just looking for that one scratch off ticket, so to speak, to try to hit a home run.
Exactly. We'll be right back right after this break. Hi guys, this is Temia Brinson from the Mindset for Success show, and this month we're going to be talking about finances. That's right, I call it February, the month of financial freedom. Okay, so go ahead and get ready, because we're going to be talking about getting your personal finances together. We're going to be talking about things you need to know about the stock market and cryptocurrency. So get ready to take notes, get out your paper and your pen, and be sure to tune in every Monday night at 9 p.m. on the Daily Gospel Network.
What exactly are stocks?
Stocks represent ownership in a company. By owning shares of stock, you own a piece of a company. If the company does well, the stock may increase in value. If the company doesn't do well, the stock may decrease in value. Some companies may pay a dividend to owners of stock.
What are bonds?
A bond is like a loan you make to a company. You get paid interest on the money you invest, known as principal. Unlike a loan, however, the value of the bond fluctuates based, among other things, on the performance of the company and the interest rate environment. You can sell the bond at any time. If you keep it until maturity and the company doesn't default, you will be repaid your principal plus interest.
I heard them say don't go against the grain, do the same thing. But if I want different results, Webster say that's cray. Ain't gonna be the one that imitate nobody. Got my own lane, just let me ride. Don't get a vibe, shots fired, that's Mayday. This might not be your thing, and that's okay. But I refuse to be fake just to get your approval. That would be futile. It's so crucial I remain true to me. Tell them lies, they can vacate. Deuces.
How are we supposed to elevate if we participate in masquerading? We don't need to be validated. Unique from the moment I was created. Everybody wanna be somebody, don't nobody wanna be themselves. I call that a fail. Yeah. Everybody just ain't anybody. We were created to be ourselves, no one else. So I'ma be me. Yeah, I'ma be me. Yeah, hey, I'ma be me. Yeah, I'ma be me. I'ma be me. Yeah, I'ma be me. Yeah, hey, I'ma be me. Yeah, I'ma be me.
I heard them say don't reinvent the wheel, keep the same feel, leave it alone. No, I won't fit inside your circle. Hey, I'm straight. Hear my vocal, I'll be solo. That's on God, numero uno. He's my vocal. Try and stop me, that's a no, boy. You can miss me with that do it like everybody else. Listen, Linda, I'm not damn bro, I'ma be myself. For real, I won't compromise to legitimize myself. Keep your boxes and your labels if that's what it takes to make a little paper. I'm good.
How are we supposed to elevate it? We participate in masquerades, and we don't need to be validated. Unique from the moment I was created. Everybody wanna be somebody, don't nobody wanna be themselves. I call that a fail. Yeah. Everybody just ain't anybody. We were created to be ourselves. No one else, no one else. Everybody wanna be somebody, don't nobody wanna be themselves. I call that a fail. Yeah. Everybody just ain't anybody. We were created to be ourselves. No one else. So I'ma be me. Yeah. I'ma be me. Hey, I'ma be me. Yeah. I'ma be me. I'ma be me. Yeah. I'ma be me. Hey, I'ma be me. Yeah. I'ma be me. I'ma be me.
Hey, I'ma be me.
And now, let's continue with our discussion. And like you said, it depends on who you are. Because right now, I already have my long-term investments. So now I'm just doing day trading just to, flip turnover money. So it depends on who you are and what your goals are.
See, you like the risk. You like the active review and analysis. Some people, they may not be able to watch the stock market all day to know when to get in and when to get out, right? So there are investment tools that are afforded to them in terms of they can put in a stop limit or a limit order on the buy or sell side, right? So let's say you buy a stock at 50, and you like, you know what? I don't want to take more than a 10% loss on this thing, so you'll put in a sell order for 5% less, so at 45. So whether you're watching it or not, that order is automatically triggered to limit your loss.
Yes.
But let's say, you know what? I'm not greedy. I bought the stock at 50. If I get a 20% return, which is the $60 mark, I'm happy. So you might put a sell limit, right? Stop limit on that particular stock. So if you're going on vacation or doing whatever for a week, 2 weeks, a month, 2 months, and all of a sudden it hits that point,
right?
You got your 20% return
automatically. Yeah.
But what I always tell people, I said, listen, don't do these fly by night apps or these weak platforms. Go to a mature platform like TD Ameritrade, E-Trade, or Fidelity. They have zero commissions on stock transactions. Okay. So you don't have to factor in those fees, right? It's zero. Many of them have no minimum, right? So you're not blocked by, I need 10, 25,000 in order to invest. No, it's no minimums. And guess what? They have some of the best research reports.
Yeah,
and they have some of the best, for people like you, the best charts and graphs and all the flickering colors, right? To look at, to see the technical analysis.
I need to see what is going. I need to see the trend. I need to see where I want to enter and where I want to get out.
So in many of those research reports, going back to what I said earlier in the beginning of this program, for example, Fidelity, they have some of the best research reports, right? That offers different opinions. Some say the stock is going to go way up. Some say it's going to be moderate. Some say it's going to be minimal return. But you can read all those reports, look at the financials. They break it all down for you, and you can make your investment decisions. Some of these other apps, they may not have that level of sophisticated research reports. That's for free. So why am I messing around with a fly-by-night app when there's no minimums, no fees to invest, and I get some of the best execution? They're not going to say that you can't buy on this particular day because someone said so. No, don't play around with that. Go where the big boys and girls are investing, and you have some of the best tools. And guess what? If you do have dividends, if you do invest in stock that pay dividends, a platform like Fidelity will reinvest those dividends for no fees.
Yeah, you can choose the option to have it automatically reinvested.
For no fees. So all these things are extremely important, but it all starts in knowing who you are and your personality, and that way you know how and where to look and search.
Okay, now what about stock options? Because the reason why a lot of people retail, we call them retail investors, not the regular investor.
Right.
For the retail investors, people who don't invest on a day-to-day basis, what about knowing how to do stock options? Because the reason they're on some of these, fly-by-night apps, like you call them, they do that because it makes it easy for them to do like stocks and stock options right on their phone.
Right. It's many of these other platforms, the three of which that I mentioned, as far as E-Trade, Fidelity, and TD Ameritrade, they sell. Well, they have a platform for stocks, options, and all types of derivatives, even mutual funds, ETFs, and things of that nature. So many of these platforms offer all of those for investors to be able to engage in that type of trading, as long as it's suitable, meaning that it's aligned with their investment objectives, risk tolerance, and so forth. Everyone's not suitable for options, right? You have to go through a specific review and approval, separate and apart from your regular stock investment account. Even though it might have the same account number, you still have to go through a separate review to be able to invest and trade in options.
We'll be right back right after this break.
What's the next dividend date?
The ex-dividend date is the date that determines if you are owed a dividend. If you held shares of a stock before the ex-dividend date, you get the dividend. If you purchase shares of a stock on or after its ex-dividend date, you will not receive the next dividend payment.
What's an IRA?
IRAs, or individual retirement accounts, provide tax advantages for retirement savings. There are a number of different types, such as traditional IRA, Roth IRA, SEP IRA, and simple IRA. Each type has different benefits, criteria, and contribution limits, so be sure to choose the right one for you.
A little over a year ago, I was let go from my job after being there for 17 and a half years. I was looking for employment and had back-to-back interviews. Little did I know, my entire employment file was frozen and no one was able to verify my previous employment. So while I was trying to get that straightened out, I got my mortgage license. But guess what? That wasn't enough. So one day, a pastor friend of mine told me about making money on the stock market. I researched it, found teachers and people on YouTube to explain everything, and finally, I gave it a try. My first trade, I made $400, and then I got better the more and more I started trading. I got to the point where I'm making almost the same amounts that I was making when I was on the job. Now I'm buying a new car and still paying my bills, all while trading stocks for a living. I am what is called a swing trader. I remember while on my previous job that I would be saying to my coworkers and to God that I wanted to work for myself so I could free up my time and do what God called me to do. Little did I know that God was listening in on the conversation and working to fulfill that dream. I want to give you the opportunity to have the same financial knowledge. So let me encourage you to become a member of Mindset for Success. Become a VIP or a professional member, because when you have those memberships, you will be able to follow my journey. I will have videos showing you how I do trades. You will have access to certain trades that I make. You will also see what I'm doing and also see the strategies that I put in place. So again, go ahead and join and sign up. You have to be either a VIP or a professional member to gain access. So go ahead and do that today. And now, let's continue with our discussion.
So if options fits your investment objective, risk tolerance, and you have the right level of sophistication or knowledge and understanding in it, and you're approved by the broker dealer to engage in that type of investment activity, then by all means, you can actually go and do your research. So I would do the same type of research in terms of, let's say if you want to invest into a particular company, options affords you the opportunity to get a similar type of investment return by buying the options instead of the stock. So you could actually invest less money, and your percentage of return might be the same, but of course, it all depends upon how much money you're actually willing to risk.
A lot of people want to know, people who aren't familiar or who don't trade stocks often, they want to know, this is like the most question I'm asked. How do you know when to get in the trade, when to enter, and when to exit?
So I think this really comes down to personal choice, right? So how do some of the big guys do it, right? So if your target goal is X percentage on an annualized basis, that's how you're managing the portfolio, right? So for an example, before you go in, you automatically plan your exit.
Right.
Right. So example is if your target is 20% and you're good with 20%, you bought at 50, it went to 60, you sell.
Exactly.
You gotta have discipline. If the same discipline that you should have on the spend side, I'm not going to spend more than $500 or $100 when I go in this store or whatever, is the same discipline you need to have with investments. 20%, 20%. Now, if it goes to $62, $65, oh man, I can actually extra $5. Don't sweat it.
I've done that.
You made money. Don't be greedy.
Right.
Bulls make money. Even bears make money depending upon your investment strategy, right? If you sell short. But pigs get slaughtered. Why?
Yes.
Because they're too greedy. So understand what your investment objectives are and stick to that discipline. If you're projecting 20% and you're good with that stock return, when it hits 20%, get out. Right? Now, if you're like, you know what? I need to stick to my discipline. Right? And you got 200 shares. Maybe what you should do, but yeah, it might still go up. Sell half of it. So you realize someone that half, right? And then you let the other half roll.
Oh, now that's a good and interesting strategy.
So if it goes up to 65, 70, then you have another decision. Do I sell another half and leave yourself 50 shares or get out completely?
Right.
Right? But at least you took some chips off the table. Same thing in a down market, right? So if, let's say all of a sudden the stock market goes from 31,000 all the way down to 29,000, drop 2,000 points. And it might still continue to drop. Sell half your portfolio.
Right.
So that way you're still invested. Some people might say sell all of it. So let's say you sold half, right? Then when it goes down or near bottom and it starts to, let's say, near bottom or starts to creep back up, then you could buy back the other half. That actually cut your cost basis drastically. So when it does come back up, if it comes back up, you even have a larger gain. Some investment strategies, if you have 200 shares and the market is at 30,000 and everything is declining, some people, based upon your risk tolerance, they might say, you know what, I don't like all this risk. They might sell the entire 200 shares.
Oh, no.
But I can't say, oh, no, because every person is different.
Okay.
Generally, good portfolio management, right? Especially if you're investing into solid fundamental companies, not fly-by-night stuff, not scratch-off lottery companies, good companies that you know will still be, generally speaking, still be around. Don't sell the entire 200 shares. Sell half.
Okay.
Right? At a higher amount, you sold half. You still have 100 shares. Then when it's going down and it seems like the market is bottomed out and poised to come back up, you buy that 100 shares back, right? If you don't see something else, thereby you just reduced your cost basis.
Right.
You made money on the 100 shares. Don't forget that. You lowered your cost basis on that 100 shares as well because you bought back in. So now the 200 shares.
Redo your re-entry on another. Oh, I got you. Okay.
You see what I'm saying? But you made money on the 100 shares that you sold.
Right.
And you lowered your cost basis when you bought the 100 shares back at a lower price. Thereby, you lowered your entire cost basis on the 200 shares. And you wrote it back up. It's almost like making money twice.
Twice, exactly. That's what I do, boo. That's what I do.
There you go. Right? But I'm just saying, some people don't like the roller coaster ride.
Oh yeah, my tolerance level is because I have alerts, so it doesn't bother me. I don't watch it all day. So
right. So some people they might want to sell out completely, and then go all in once it bottoms out. Other people might want to take a portfolio management approach, like I described, sell half. Then when it goes down, buy either that same stock back or other stocks in the industry that might actually rebound quicker, right? So it all depends upon your investment strategy, but at the same time, listen to the news, read the research reports, and see what it's saying, right? And I don't necessarily. I'm not saying this is the way you should go about it. In terms of what I'm about to say, but I'm gonna tell you a little trick that I used back in 2009.
Okay. We will continue with John Burnett next week.
For success.